Hello, my name is Marty Foreman. I'm a state specialist with University of Missouri Extension Ag Business and Policy. In this video, I'll review USDA September crop production and world supply demand estimates. First, though, I wanted to start and review acreage. USDA made revisions to crop acreage this month, some fairly significant revisions as they utilized data from the another USDA agency, the Farm Service Agency, and they tend to, in the fall, true up their survey estimates with the National Ag or with the Farm Service Agency estimates. These are the totals from the Farm Service Agency where farmers certify the number of acres they plant of the various crops. So they just released an update for September on the number of acres that were certified. Now there's a small number of farmers that are not part of the farm, or not are not in government programs, in other words. So the numbers are not exactly the same, but you can historically get a pretty good idea from what the FSA numbers, where they come in, and then extrapolate to the total for the U.S. So USDA has a pretty good idea based on the numbers from as they release them from the Farm Service Agency and how they can make adjustments to the total crop acres for corn, soybeans, wheat, etc. So you can see here from this graph that prevent planting, this is total prevent planted all crops, back in 2019 was all the way up to almost 20 million acres. Now still quite high last year at over 10 million. This year, however, a lot more, I guess, kind of in the low end of the range here in terms of prevented planting acres. So not many significant problems, at least not nationally in total, for prevented planting. If you look at corn and soybeans together, this is a graph on corn. You see the red bar is the prevented planting. That number was quite small this year, only 638,000 prevented planting this year. So combined with the certified acres, or the number that were planted, combined with the prevented, gives us a number just under 92 million acres. So that number then led, that number was a little higher than, I guess, relative to the USDA NASS number. So that gave USDA some justification to boost their overall corn planted acres. And similarly on soybeans, although the number for soybeans were actually revised down, but the planted and prevented planting came in at 86.5 million acres. We only had about 337,000 acres of prevented planting for soybeans. Just wanted to mention the precip totals here for the summer. You can see this whole area in the Western Corn Belt was quite dry through the summer. So well below normal precipitation from June through June all the way through August. So this is an area that, I've had a lot of concern about yields there based on all this, this dryness. Now, if we look at more recently here, last couple of weeks, we've seen some pretty, heavy rains reach those dry areas. Now, it may be too late to do a lot of good, I think, particularly for corn, but we may see some late season improvement in soybeans. We'll have to wait and see. This rain through here was what resulted from the hurricane. Now, USDA did mention that they did have pretty strong yields down here for soybeans and corn, but they didn't account for any potential damage from the storm that went through that area. So there could be some adjustments there from storm damage going forward. Just to look at the Drought Monitor maps comparing a month ago, August 10th, to the most recent soil moisture mapping. You can see those rains that we just looked at earlier, how they moved through the Northwest, made a little bit of a dent in this dry area here in the Northwest. You compare that to a month ago, it's a lot more brown and red a month ago compared to most recently. So it hasn't completely turned the corner, of course, but it did allow for some improvement in the soil moisture situation out there. Looking at the corn outlook on yields to start with, we had USDA increase the corn yield up to 176.3. That's up 1.7 bushels from August, and it's close to the previous record yield here a few years ago. So a strong yield. We'll have to see where this goes from here, whether or not we'll see some further increases or not. I'll talk a little bit more about that in a second. In Missouri, we had the corn yield adjusted down 2 bushels from last month to 169 even. So a slight cut in Missouri's yield from last month, but still a fairly strong corn yield for the state. This is a graph just showing the changes in the national corn yield, from the September crop report through to the January or the final crop report. And you can see that in the last few years had some pretty significant downward adjustments to yield, particularly last year, down almost 7 bushels from September to January. So I don't think we're anticipating something like that again this year, but we have had some pretty significant revisions in the last few years, especially. Looking at the state level yields here, this is show these for each of these states. It shows the current yield estimate and then the percent change from the previous month. So here in the East, of course, we've got really strong yields, record yields in a lot of cases here. Illinois at 214, Indiana 197. That's up a little bit from last month. Ohio got revised down slightly. A significant increase in Michigan, up 3%. And then again, strong yields across the Southeast. Now we may see some revisions, from storm damage, but overall, a pretty strong yield for all of these states across the South. I think the significant takeaway to me, though, is the fact that the USDA actually increased yields in this mostly dry area up here in the West and Northwest. Iowa was up 2.6% from last month. Wisconsin up 3%. Minnesota up 4.8%. I think that was 8 bushels an acre. An increase for North Dakota. South Dakota didn't change, but it at least didn't go down any further. So I think the fact that they didn't, that these yields didn't come down, they actually went up a little bit, suggests that maybe we've kind of hit the bottom in terms of their damage and what we would look at going forward for yield. So I think a lot of it's really going to depend on how strong are these yields out here in the East. Continuing on with this yield discussion a moment. So this is another graph or table, a graph that took from the Secretary's ag briefing. And you can see here, this goes back to 2016. So the blue bars are the ear counts of the ear populations per acre for these 10 large producing states. So these are actual samples that USDA gathers in fields. And so you can see the ear counts. You're reading that over here on the left-hand axis. You can see the ear counts starting in September. Tends to be a little bit of a seasonal decline in ear counts, I think, from September to the final. Not always the case, but for the most part, you tend to see at least a slight decline in the ear counts as you move from September to the final. Notice here in 2021, just over 29,000 for the ear count for those 10 objective yield states. So not the highest recorded, but a pretty strong ear count to begin the objective yields for 2021. Now the red dots here are changes in the national yield from September to the final. So I'd point out, and you're reading that over here on the right-hand axis. So I'd point out here in 2017, notice that had the ear counts decline a little bit, but the yield went up. So your yield is a function of ear counts and ear weights. So if your counts are going down and the yields going up, that implies that your weights are increasing. So in 2017, you had a pretty strong increase in yields, and that was driven by stronger ear weights or higher ear weights as you move through the progressive crop reports. Now, contrast that with last year, when we had just a modest decline from September to the final in the ear counts. However, the yield fell, as I mentioned, almost 7 bushels an acre. So this implies that the ear weights were falling through this period. Now, so what does that mean going forward? I don't know. You can draw a lot of conclusions. I don't suspect that we're looking at some kind of a situation like we had last year with dramatic decline in ear weights. As I said, there was the fact that USDA actually bumped up the yields in those dry areas, in those states with the dry air, dry soil moisture, that I suspect that if anything, that we'll see the ear weights maybe hold steady or maybe even increase a little bit. So we'll also have to see if there's any adjustment on this on these ear counts. But I wouldn't anticipate anything as dramatic as what we saw last year. And if anything, we may see a slight increase, and that could drive yields at least a little bit higher. Looking at the balance sheet for corn, not a large change in the old crop. This is the crop year that ended at the end of August. We see USDA revised the ethanol estimate down 40 million bushels. They also trimmed exports by 30 million. So we had a net total use decline of 70 million bushels, and that caused ending stocks, a corresponding increase in ending stocks by 70 million. On the new crop, this is where most of the focus is. You can see that USDA revised acres up over 600,000 acres on planted and close to that same number on harvested acres. And then along with the increase in yield, those combined resulted in this 246 million bushel increase in production from last month, and we're essentially at 15 billion bushels of total production, up over 800 million from last season. Looking at total supply, we're up 300 million, over 300 million bushels from last month with a combination of this production increase and higher beginning stocks. On the use side, USDA offset some of that increased production with higher feed and residual use. That kind of is mostly driven by a larger crop. And then also bumped the exports up 75 million bushels from last month. However, I would note that we've got the forecast for exports to actually be down 270 million versus last season. So looking for a year-over-year decline in exports. Overall, we've got total use up from last month, but down a little bit from year-over-year. Ending stocks are now forecast at 1.4 billion bushels. That's up 166 from last month and 221 million from last year. Looking at the stocks to use here, 9.5%. That's still relatively tight stocks to use. For corn, anything below 10%, you consider that to be fairly tight. However, USDA, with this increase in the ending stocks, they did revise the season average price down 30 cents a bushel to $5.45. However, that's still $1 a bushel higher than last season. Looking at the exports as we begin the marketing year, so this is a graph charting the export commitments as we begin the marketing year. So as the marketing year starts, as of September 1, roughly, beginning of the year, we take a look at how many export sales we have on the books. And you can see here, this year we're starting out in a very strong position, over 950 million bushels of export commitments, highest ever, and even above last year's quite strong start. So we're off to a great start on export commitments, record level. However, a lot of this increase, though, is from China accounting for almost 50% of that total. Without China's sales, we'd be down here more closer to 483, which is almost right on the 10-year average. So China is accounting for, of course, the large portion of that increase. I would note too that USDA made some revisions to China's supply demand, but they did not revise China's forecast on imports from all origins. So held imports into China at 26 million tons. That's not just US, but from all sources. On world production, we've got a pretty healthy increase, month over month and also year over year. You can see US up 6 million tons, up almost 21 million tons from last year. In addition, I mentioned China. They revised China's production up 5 million tons from last month. They're looking at citing pretty strong weather or favorable weather and strong yields in Northeast China, is really driving this increase in the production estimate, and also looking at this year over year be over a 12 million ton increase. So these larger production totals also result in larger ending stocks. See, we've got 21/22 marketing year ending stocks up over 11 million tons from August. And that was almost 12 million tons above trade expectations. So that was a little bit of a negative surprise on the increase on the world ending stocks and production and ending stocks numbers. Looking at the prices, this is the monthly nearby corn futures. So each of these bars on here is a month's worth of trade. So this is a long-term chart going all the way back to 2012. And you see the high that we posted in conjunction with the drought back in 2012 at 849. We had a long period of declining prices, and then this extended sort of sideways pattern for a number of years, with prices ranging between about $3 and about $4.50 or so at the high end. And then we pushed through that this year, got all the way up to 735 at the high tick in the during May at the peak, and then prices have pulled back. So we pulled back from that high all the way back towards this $5 475 area on the nearby futures contract. So I view this 475 to $5 area as kind of a key long-term support area. We'll see if prices can hold that level as we move through harvest and the typical seasonal pressure from harvest. Looking at the December contract, you can see how prices on that have also pulled back toward this $5 mark. In fact, we just after the report was released today, we saw futures dip slightly below $5. The market held up though and rebounded, and we actually closed higher on the day. So we had a kind of a wide swinging outside up day, which is a slightly positive technical sign. Whether or not we can continue to move higher, I guess remains to be seen. I would point back to the August crop report. We also had a positive price response, but it didn't really last. So we've seen prices move from this 575, 580 area all the way back toward the $5 mark here as recently as the timing of the crop report. So we'll see. I think this, as I mentioned, $5 and 475 is I think kind of a key support area for the December contract. To kind of summarize things, we had an upward revision in the yield. We also had higher harvested and planted and harvested acres, so it resulted in a increase in production by 246 million bushels. Yields were revised slightly higher in states most impacted by the dryness. So that's one of the takeaways I have from the yield estimates, is just the fact that these states that we've been focused on that have been so dry, USDA actually revised some of those estimates higher. One thing of note, Brazil's corn production was revised down only 1 million metric tons to 86 million. That compares to 102 last year. The trade was really anticipating this might be a larger cut, and some, some chatter in the trade that this could be down, to 82 million or so. We'll have to wait and see if maybe could still see some downward revisions to the Brazilian crop before it's over. Global production ending stocks revised higher on increases for US and China. Mentioned that. I think the U.S. season average price, a fairly sharp cut there on the season average price by 30 cents a bushel to $5.45. Still up $1 a bushel though from last year. One of the things that I think is of some concern, at least for the futures market, is this large position the funds are holding. There are still net long, somewhere around 250,000 contracts net long futures. If the market were to kind of sustain some weakness here, markets at risk or could see the funds, unwind this long position and add to some of the selling pressure in futures. So we'll kind of wait and see, how that all unfolds here over the next few weeks. If prices can hold, then the funds will probably stick with those positions. If not, this could add to the selling pressure. Next key USDA reports are set for October 12th. And we've got another, just like today, set of crop production and WASDE updates. For soybeans, soybean yield increased. The national U.S. yield increased 0.6 of a bushel up to 50.6. So a record USDA forecasting, and now a record yield for soybeans. For Missouri, the yield came in at 51 bushels. That was revised up a bushel per acre from last month. So Missouri looking at a record yield there. For the state, at the state level, we've got yields similar to corn. I mean, we had some increases in some of these western states, maybe not quite as significant as in corn, but held strong yields out here in the east. And then we had strong yields down here still in the southeast. Now, again, USDA hasn't accounted for some of the storm damage, so we could see some negative impact on the crop from that. If so, that'll show up in next month's report. Soybean production now pegged at 4.374 billion bushels. That'd be the third highest soybean production on record. Turning to the balance sheet, supply demand table for old crop, fairly modest adjustments, reduced the crush by 15 million bushels. That fell through to the bottom line here, ending stocks, so it had a corresponding increase in ending stocks as a result. And the stocks to use ratio at was up 0.4 of a point. The season over here on the new crop, we have in fact, we had acres down for soybeans. Now, while corn acres increased, USDA revised soybean area down around 300,000 acres. So that tended to offset this 0.6 of a bushel increase in the yield. So we wound up with production up 35 million bushels from last month, as that lower acreage at least partially offset the higher yield. Production is still also up 238 million bushels compared to last season. Now, on the demand side, USDA cut the crush forecast by 25 million bushels, although it's still up 40 million from last year. Exports revised up 35 million. So offset the lower crush with increased exports. However, exports are still forecast down significantly from last season. We wound up with total use down up 10 million month over month, but down 116 million bushels from last year. Still looking at stocks to use at around 4%. That's still very tight for soybeans. USDA did revise the season average price down pretty significantly, down 80 cents a bushel to $12.90. Again, though, that's still $2 higher than last year. Look, similar to what we discussed in the corn, this is the beginning of the marketing year sales. Outstanding sales. We begin the marketing year, we've got all these export commitments. But unlike corn, which is up from last year, we've got soybean commitments down from last year. Still a solid number at 772, but well below where we started at this time last year for soybean exports. Looking at the price chart, similar to corn, we have the high back in 2012 at nearly $18, high this spring at $16.68, and then prices have pulled back. I think I would call this $12 area as a long-term support level for soybeans. So I think that's kind of a key level to hold as we move into harvest and some seasonal pressure at that point. Looking at the November contract, similar to corn, you can see the prices have moved down here close to this this lows from earlier this summer, right around 12.50 or so for the futures. Soybean market also rebounded following the initial negative response to the report. So a pretty decent close in the beans following the update. I think in order to kind of break this overall, I call it downtrend in prices here from the high last spring or early summer, probably need to see the November contract push up through 13.50, 13.75 to really break this overall downtrend. And we'll see if prices can hold this 12.50 and maybe as low as the $12 area as we move into the fall. So we had downward adjustments to acreage for soybeans, and upward adjustment to the yield. So we wound up with not a large change in the production estimate from last month. This was also fairly close to what the trade expected the production number to come in. So anyway, it's not too surprising for the market. We had the crush down, exports up, so more or less offsetting one another. We've got lower total use year over year, and that's driven mostly by lower exports. I think the real question here as we move through these subsequent reports next month, November, is whether or not those late season rains will boost the soybean yields in those dry areas in the north and western portions of the Corn Belt. We'll have to see. It's pretty late to cause a major change there or be beneficial, but it could add a little bit to the yields. Again, season average price was down pretty sharply to just below $13. I think it's driven largely by the lower meal price. USDA revised their meal price forecast down $25 a ton to $3.60, while leaving the soybean oil unchanged at 65 cents a pound. So we really have soybean oil carrying a large portion of the crush here, or the oil share is quite strong. Normally, it's a soybean meal that tends to lead this. It tends to be the driver. However, currently, it's really the soybean oil market that's holding up quite well. Again, next reports are October 12th. Have both crop production and a WASDE update at that point. Well, at this point, thank you for watching. This concludes the video presentation. Be sure and check in with us next month on October 12th when USDA revises these next set of reports. If you have questions, you can email me, or my phone number's there as well. You can follow us on YouTube and Facebook. Thank you for watching.